Good morning, ladies and gentlemen, and welcome to Western Investment Company of Canada's webcast. My name is Tom McMillan, and I will be your moderator. Today, we'll be discussing Tavir Capital Corporation's offer to invest at least $20 million to transform Western into an insurance and investments holding company. Please note that while discussing the proposed transaction and answering questions, we will be making reference to non-IFRS measures, which may or may not be comparable to similar measures provided by other issuers. We will also be making forward-looking statements. Such statements are subject to known and unknown risks, and actual results could differ materially from the expectations expressed in today's presentation. For an expanded discussion of such risks, please refer to the news release dated March 22nd, 2024, or the comprehensive cautionary statement at the end of this presentation, which will be available for download on Western's website. All dollar amounts expressed in today's call are in Canadian dollars. On the call today, we have Scott Tannas, Western's President and Chief Executive Officer, and Paul Rivett, Tavir's founder and president. Scott is a Canadian senator and a proven leader with more than 30 years of experience in the insurance industry. Mr. Tannas' deep experience in insurance started with the purchase of High Alta Insurance Brokers in 1993, which eventually became Western Financial. He served as CEO of Western Financial until 2014. Paul Rivett is a deeply experienced value investor. He joined Fairfax Financial in 2003 and was promoted to president of Fairfax in 2013. There, he led corporate development, financing, and M&A with a specific focus on insurance and reinsurance float transactions. Both Scott and Paul will be available to answer questions at the end of today's call. Please feel free to submit your questions at any time by accessing the Q&A area using the Q&A icon at the top right of your screen. With that, I will turn the call over to Scott and Paul. Gentlemen.
Thank you, Tom, and thanks to everyone for joining us here today. We're truly excited about the opportunity to bring these two teams together to transform Western Investment Company. Paul's track record of success in value investing speaks for itself, and we've got a good, strong insurance business at Western that we want to grow. It's a powerful combination. The board of directors and I have spent 9 months working on this transaction. Paul's vision truly aligns with our own, with the same aspirations for our business and for all shareholders. Over to you, Paul.
Scott, thank you, Western shareholders participating on this call. By the end of today's presentation, I think you'll see the same potential that Scott and I do for Western as an insurance and investment holding company. We've been actively searching for a premier team and platform to build an insurance underwriting and investment holding company focused on growing book value per share over the long term. With Scott and Shafeen and Fortress, we have the small and nimble platform to begin building upon. First, let me give you a few key terms of the proposed transaction. The transaction will include a minimum of $20 million investment from companies associated with or controlled by me, along with an over-allotment option. In return for the $20 million infusion, we will receive at least 50 million multiple voting shares that have 10 votes per share. We will explain why these multiple voting shares are an essential aspect of the transaction later in the presentation. Western's existing shareholders will all receive warrants that give them the right to purchase 2.5 common shares at 40 cents per share for each share they currently hold, thereby ensuring their equity is not diluted. An important and unique aspect of these warrants is we are planning for them to be tradable. So Western shareholders can potentially monetize their value even if they do not want to exercise them directly. If the warrants are exercised in full, we expect to raise an additional $30 million. Scott?
Thank you, Paul. We've built very strong protections into the transaction for Western shareholders. In addition to the rights each shareholder will receive, Western shareholders will also have the ability, if they wish, to convert their shares to multiple voting shares on a one-for-one basis. The multiple voting shares come with restrictions that include restricted from sale without prior written notice, restricted from trading for a 6-month waiting period before converting to a single voting common share. Tavir is restricted from privatizing Western without approval of the minority shareholders. And finally, our dual-class share structure is modeled on the 7 principles of the Canadian Coalition for Good Governance dual share class policy. Paul?
Thank you, Scott. It's worth noting that I am intending to put a substantial portion of my own personal wealth into Western, and that I intend never to sell any share in Western that I purchased personally. We are here to be stewards of this great business that we're going to build over the long term.
So before getting into the transaction, it's worth looking at where Western is today. As of our last reporting period, Western had 4 investments spanning insurance, auto glass repair, dairy products, and healthcare. The combined value of our investments in these companies is estimated to be $25 million. Western's net asset value is estimated in our MD&A at 67 cents as of the last reporting period. Our closing share price last Friday of 47.5 cents represents 0.71 times Western's net asset value, which, all things considered, is generally in line with our peers. However, as a board, our fiduciary duty is to maximize shareholder value for Western's investors. We believe the proposed transaction aligns with this goal and will enable us to unlock greater value from our diverse portfolio of investments. Let's now zoom in on Fortress Insurance. Fortress is a licensed insurance company primarily focused on property insurance, but also offering niche insurance products. It operates across Western Canada and most recently has entered the Ontario marketplace. In 2024, the goal is for Fortress to generate $30 million in annual premiums. When we bought into Fortress in 2019, it was a little company doing about $500,000 a year in revenue and serving one client. From there, we put our networks to work and worked a program with Shafeen Mawani at the leadership, where we have been able to grow at a compound annual growth rate of 254% between 2019 and 2022. We continued to grow in 2023 and beyond. Fortress Insurance has really surpassed our expectations and highlights the opportunities that we've found so far. With the support of this transaction, we believe we can grow Fortress to $100 million in written premiums per year by 2028 through 4 pillars. First of all, through prudent organic growth in the Ontario marketplace, as well as continuing growth in the West, partnering with additional managing general agents, and widening our circle of brokers. Acquisitions, and also through technology-delivered sales initiatives. We see lots of growth opportunities outside of Fortress. There are hundreds of unique merger and acquisition opportunities throughout the Canadian insurance marketplace and through the value chain. But this is also how we can become victims of our success. I'm going to turn it back to Paul for a moment to explain the importance of the multiple voting shares.
Thank you. We believe the multiple voting shares are essential to provide Western and its shareholders the time to scale and grow the business. This will help protect Western from opportunistic acquirers. Scott, you have some experience with this.
I definitely have some experience with this. When I led Western Financial Group, it was acquired before we otherwise would have liked. If we look at the market today, it's dominated by 16 large companies that control approximately 75% of the market. With only one exception, all of the medium-sized companies with annual premiums between $500 million and $1.5 billion are protected in some way. They're either owned by a large foreign insurance company as a branch office, or they're mutual insurance companies where the policyholders are the owners and can't sell the company. On the next slide, I'll talk about what can happen if you enter this medium-sized category without sufficient protections in place. So here is the illustrative tale of Western Financial Group. As was mentioned earlier, High Alta Insurance was purchased by me back in 1993 for about $1 million. We eventually went public in 1996 and then renamed ourselves Western Financial Group in 1998. By 2001, through organic growth and acquisitions, we had grown to be Western Canada's largest insurance broker. Forwarding ahead to 2011, we were subject of an unsolicited bid by a third party. Desjardins came in as a white knight and purchased Western Financial Group for $440 million, but it was still too early for us to recognize our full value. Desjardins turned around and sold Western Financial's assets only 6 years later, and they realized an additional $375 million in value. This highlights the momentum that gets created in the insurance business in the long run. And that momentum that was present when Desjardins purchased us was what comprised the majority of the $375 million when they exited. This is the value our shareholders missed out on in the exact scenario that we want to avoid through the use of multiple voting shares. I'll now turn it back to Paul to explain his vision.
Thank you, Scott. Together, Scott and I plan to transform Western from the current private equity investing company that you see on the left of the slide to an insurance holding company with an investment management arm you see on the right that will be focused on insurance-related acquisitions and value-based investing to grow book value per share over the long term. One of the conditions of the transaction is the acquisition of a controlling position in Fortress Insurance. We need to own at least 51% in order to consolidate Fortress at the Western level. Assuming all the warrants are exercised, we will have approximately $50 million in additional capital to deploy towards accretive acquisitions, including the consolidation of Fortress. Western will become a decentralized holding company, targeting long-term annual compound equity returns of 20 to 25%. On the insurance side, we will consolidate Fortress and expand its business into Ontario, acquire accretive insurance and reinsurance assets, incentivize management teams based on long-term underwriting profitability. On the investment side, we will be value-oriented and total return focused, with capital preservation being key. This is something we have already done in the past. We believe that we're on the cusp of an investment period that will favor stock pickers and the application of value investing principles. Since 1960, there are limited precedents for sizable central bank-induced disinflation that does not entail economic stress or a recession. This has historically led to increased value investment opportunities. Already, we are seeing a historic divergence between small cap and large cap valuations that we hope to be able to take advantage of. We think the Canadian marketplace is open and willing to accept a new publicly traded entrant in the insurance market. Our smaller size means we can be more nimble, and smaller investment gains can have a more meaningful impact on growth and book value per share. Finally, most importantly, we think we have the right team. Between the three of us, we have decades of experience in investing, insurance, and operational management. To sum up from the investment perspective, we potentially have an important investment window opening. Our smaller size is an advantage both in sourcing accretive investments that can drive book value per share growth and competing for capital in the insurance space. We have the right team to be successful. With that, I'll now hand it back to Scott.
Thanks, Paul. In summary, this transaction gives us a proven team and a proven platform and the capital foundation to scale our business and provides us with long-term stability, de-risking the company as it is today. In short, the transaction is designed to maximize value for all shareholders. And with that, we'll open it the floor for questions.
Thank you, Scott. Once again, please feel free to submit your questions at any time by accessing, the Q&A area using the Q&A icon at the top right of your screen. We'll take a moment for questions to queue, and then we'll get to it. Okay. First question here. Prior to the announcement, Western was trading at more than 50 cents per share. Scott, how do you justify a transaction at 40 cents?
So if we look back over the last 9 months, our stock has traded, while we negotiated this deal, our stock has traded in the 30s, high 30s, and around the 40-cent mark. We had an anomalous trading session that started in February, late February, February the 26th, and ran for a number of days. From what I can tell, one buyer, very keen buyer, and we thank them, and we'll work with them. But we had one buyer that drove the stock. It's a sign of our liquidity and our relative size as well. Once that shareholder had their orders filled, we saw the stock starting to drift back down to its more natural spot, and it closed at 47.5 cents last Friday. 40 cents is a fair price. 40 cents is our book value. Yes, our net asset value is 67 cents, but there's a lot of risk that goes into that net asset value and achieving that net asset value with the relative size of our company. So where we are today, as a sub $15 million market cap company, book value is the fair price to pay. And we've mitigated that through all of the other steps that we've taken in the transaction in support of Western shareholders, including the rights offering at the exact same price so that dilution is looked after. We think the overall package is fair.
Thanks, Scott. The next question we have is, the general concern I have is that this is selling a control position and creating massive dilution at a low price and seemingly for no pressing reason.
Well, the pressing reason is, I think, that we've been in this cul-de-sac for the last number of years as we work through COVID and all of the business challenges that we've had that are now behind us. But at the end of the day, it's not dilutive. Every shareholder has the opportunity to come forward and cure the dilution by contributing into the company through the warrant program, through the rights program. And if they don't want to, then they can lower their cost of their existing shares through a sale program that will initiate for the warrants, and we'll get them into the hands of somebody else who wants to come in at an attractive price. We don't have a lot of options when we're a small company like this. And it doesn't take much to put the company at risk when you're this small. And so for us, the directors, after a long reflection, we just felt this was the right thing to do. We need to transform where we are today. It is the best way for us to move forward and to build long-term value, which has always been our intention.
Thanks, Scott. Did the board run a process or hire a third party to do a fairness opinion?
No, we didn't. We did the work internally. Again, we're a small company. Processes are reserved for companies that are significantly larger than us. So we had to do the work ourselves, and we did the work. We did an analysis and presented it to the board of those companies that are in our similar to us in private equity and small, what their fundamentals were around trading, book value versus book price to book value, price to NAV. And what we found is that we were actually fairly valued. And so our problem is not a valuation of the stock, it is our size and what opportunities we have with the resources that we have today versus what we can do. How do we grow value? And the biggest issue for us, I think, in looking at this was Fortress Insurance. We can see Fortress growing. It needs capital, and we don't have it. And so if we stay where we are now, we will continue to see our position in Fortress diluted. We won't be able to participate. And so this was a way in which we could move forward. And don't forget, I think I say with not enough modesty, that the efforts of the Western team is what made Fortress grow. And so we need to be able to seize that opportunity and continue to participate. And that's what this transaction is primarily about. It's focusing on insurance, the business that we know, and making sure that we are there to reap the rewards of the growth that we have driven and will continue to drive.
Okay. Paul, I think this next one is for you. What is the plan or timeline to deploy the capital that you're raising, approximately 45 million?
No, that's a great question. There is no plan. As we've said, we're building this for the long term, and I think if you look at Scott's discussion about the illustrative tale about what he was able to do with a first acquisition of $1 million, and unfortunately was forced to sell out north of 400 million. That's building value over the long term. That's what we want to do. We want to be patient, prudent, but opportunistic. And as Scott also mentioned, we've already identified hundreds of potential acquisition and partnership candidates, and we're in discussions with several of them. But we're going to be taking our time, and we're building this for the long term. And I'm intending to hold the shares that I'm buying personally for my lifetime. So this is where we're building over the long term here.
I think this is probably for Scott. Who is or will be the remaining shareholders of Fortress?
Right. So as I mentioned, we have seen our position diluted from 50% to 28% over the last few years as Fortress went and found additional capital from new investors. And so there are right around 20 shareholders in the private company of Fortress Insurance. We announced yesterday that we've secured an agreement with one of the larger shareholders to acquire 14.2% holding in Fortress. So post-transaction and post this transaction, we will own 43% of Fortress. Our goal is to get north of 51%, and that's a condition of this transaction. We're confident we'll get there based on the discussions that we've had and as evidenced by what we announced yesterday. But we are going to make an offer to every Fortress shareholder and provide them with an opportunity to take cash or to take shares in Western at 40 cents, just like everybody else. And that will go on over the next number of weeks. And as we secure agreements, we'll announce them so that people can watch our progress towards 51% and beyond.
Great, thanks, Scott. Why was the stock halted? And Scott, I'll hand that to you.
Sure. Yeah. No, it's a requirement of the TSXV given the size of and nature of the transaction that was announced. There are some requirements on both the issuer on Western to file certain documents post announcement, and similarly with Tavir. Those documents go into the TSX, they get reviewed, and then the halt will be lifted. We're working as quickly as we can to get those documents to the TSX for their review. And we're hopeful that we will be able to see the halt lifted within 2 to 3 weeks, but we will report on progress as we go here.
Great. The next question is, good morning, gentlemen. Nice to reconnect. Are you looking for further insurance companies or brokers?
Yes and yes.
The next question is, will the new company be licensed in all provinces? I'm assuming that this is referencing the insurance company itself.
I think one of the again, we want to build fortress for the long run. There's always a question around when is the right time to enter Quebec. It has a lot of requirements around it that make that a challenge, certainly for a small company. But the idea is to build a good, strong national insurer in Fortress, and we're well on our way with the Ontario West registrations.
That's great. Thanks, Scott. I think this question has been already dealt with, but I'm just going to ask it anyways. This is to Paul. What is your expected velocity on acquisitions? How big is the market for targets?
Yeah, the market's huge. You know, as Scott pointed out in one of his slides, there's literally hundreds of acquisition and partnership targets. So we're super excited about it, and a lot of them are in the smaller space where we think we're going to be able to play and be able to do smart acquisitions and partnerships. The speed at which we'll do them, though, will be dictated by doing good deals. And we're going to be stewards of our own capital. And like I said, substantial amount of my own wealth going in here. And we're going to be good capital allocators, which requires us to be patient and prudent and just wait for the good deals. And so can't give any indication on velocity, but like I said, we are already in several discussions, and we'll be working to allocate as best we can as the opportunities arise.
Thanks, Paul. The next question is related to the timeline for the actual transaction. So when do you expect warrants to trade, stock to be off halt, and deal closing? What does that sort of tentative timeline look like?
So we need to file a circular for shareholders that gives them all of the details, shows them the agreements, and allows them the time to digest that. And there's some regulatory requirements for time to pass with folks in possession of that circular. The circular itself has to go through an approval process with the regulators as well. And we also have insurance regulators that need to understand and be comfortable and approve the transaction and the follow-on transactions where we acquire additional shares of Fortress. We're estimating that we will be in a position, if everything goes well and with a little bit of a margin of safety, we should be in a position to do something in early to mid-July. That's the target. If we can move it up faster, we will, and we'll keep people informed. But we'll set the date once we are ready with the filing documents and circulars for shareholders.
Great. As far as the stock halt, what sort of timeline can investors expect there?
Our goal is 2 to 3 weeks, and we will keep people updated on whether that timeline is going to shorten or get a little longer.
If all of Western's float will be given to Tavere Capital to manage, will that give rise to any conflicts of interest? Fairfax started out with Hamlin Watsa as a separate entity, but that eventually got merged into Fairfax. Will that be the direction for Tavere Capital eventually?
Paul, go ahead.
Yeah, so I'll go first, and I know Scott, you probably want to add to this, but it's an apt example. Right now, Western's quite small, and so we need to be prudent with cost. It's just better to be a supplier of services rather than vend in. But I fully expect that as we grow and the float becomes larger, it will necessitate probably doing something to bring in. But for now, as you can see, it's growing super fast, and Shafeen's gonna Shafeen's going to get us growing even faster with profitable underwriting, and that'll increase float. But for now, it's relatively small.
Yeah, I concur with that. And in the meantime, just so people know, the regulator has full view of any non-arm's length agreements that occur, and this would qualify right off the bat. So, and Fortress has a separate board with separate shareholders, and they will want to have a say on this. It's it will be a non-arm's or a non-arm's length transaction, but with arm's length terms, and it will be done with the concurrence of both the regulators and the Fortress Insurance Board.
Thanks very much, gentlemen. Next question is, thank you for your time today. What will be the investment philosophy of the group beyond value investing? Will you emphasize commodity companies or those with a lumpy earnings profile as some other Canadian investors do? Or will you emphasize franchise businesses with lower earnings volatility? Will you be looking at commodity companies or more Buffett-esque compounders? Both?
So maybe I'll go first, but Scott's done very well acquiring companies over the years, and we're going to work very well together. But I think we're very much focused on compounders that can grow at a really good price, great business at a good price. Doesn't mean we might not get into something more commodity-like from time to time if the price is right, but the focus will be on compounding.
Great. What are the expiry for the rights at this time?
The expiries. So what's proposed and contemplated in the deal is that from the issuance to the expiry we would facilitate 60 days of trading. So 60. It's a relatively short warrant, but the warrant piece doesn't come until we close the deal. So we've got a lot of time to work on trying to identify potential acquirers of the warrants for folks that want to sell, and that's a job for Paul, Shafeen, myself, and others to do between now and July.
Okay. This next question is, congratulations, this sounds like a fantastic deal. To clarify, existing shareholders will have the same ability to acquire multiple voting shares? Further detail would be great.
Sure.
Yes.
So
Go
go
ahead,
ahead,
Paul.
Scott. Oh, okay, I'll take it, and I'm sure you can add, Scott. But what we wanted to make sure is we're being kind of egalitarian as possible, right? So that's the reason for giving the warrants, so that there's no equity dilution, and giving the opportunity for existing shareholders to get multiple voting shares if they want. But the multiple voting shares are structured for folks more like myself that really want to take a longer term view. And that's why there's a 6-month restriction on being able to trade. So the only way you can trade is to give notice and then wait for 6 months for you to get the subordinate voting shares, the common shares. And so that lack of liquidity won't be for most folks, I would imagine. But for me, given my stated goal of being in the stock for a lifetime, that's the best way to be, particularly as you're the steward of that 10-to-1 voting.
Will you be targeting specific risks going forward, or how do you differentiate yourself? And presumably this is related to the insurance business.
Yeah, I mean, Fortress has so far been a niche player. I think it's folly to think that Fortress can provide a value offering similar to an Intact and with all of their cost advantages. So specialty insurance is also where a lot of the, to use our slide, the small fish are. They're in the areas of specialty insurance or in specialty distribution, and so I would expect that you will see continued growth at Fortress in specialty products, in fronting, and in other activities like that, and that some our acquisition profile, at least in the early days, Paul, would likely skew towards specialty insurance products as well. Is that fair?
Absolutely.
Have you disclosed how much you intend to pay for the additional stake in Fortress?
So we disclosed yesterday that we've with the agreement that we made, it was at $2.60 a share, which for 14.2% equaled 2.6 million. So we're going to tender that identical offer to all the other Fortress shareholders. So that gives, I'll let folks do the math, but that is that will be the offering to everyone. What we're also offering those folks is the opportunity to put their swords on the table with the rest of us at 40 cents for some or all of that. So how much of the 20 million plus the overallotment that Paul has, we're not sure at this point. But if everybody took cash, it would be somewhere around 12 or 13 million, I think. And if everybody sold, which we're not certain that's going to be the case at all.
Could you discuss your view that Fortress will be able to grow the business materially in Ontario? Discuss the risk management philosophy to avoid gaining share at the risk of writing bad business and highly inflationary premiums in Ontario P&C over the past 24 months.
There's no question that that's, that the Ontario market is big and liquid and subject. I think it's fair to say with with peaks and valleys that move a little faster than other places. But we've managed to, if you look at the reports of Fortress over the last number of years, their loss ratio is exceptional, and they've done it as a small company, partnering with brokers, taking modest amounts of risk in larger policies, and also offering fronting services, which is fee driven with a minimal amount of risk. So there's no, as Paul said, there's no pressure on Shafeen and his team to dive into the Ontario market and do anything reckless or excessive in order to meet a revenue target. Paul?
Yeah, no, that's exactly right, Scott. And I think the one thing that that Shafeen's done with Fortress, and Scott, you've done previously with Western Financial, is allowing for partnerships and even investment with brokers in the business. And so we'd be looking to do the same thing as we build out into Ontario, is letting some of these brokers be partners and shareholders, and as one way to make sure, I think the question's getting to, that we just don't get adversely selected. And I think Shafeen's done a fantastic job going from basically nothing to where he is, and that's what we're going to do. We're looking for partnerships that may include some, bringing in brokers as shareholders.
Thanks, Paul. This is the next question. This deal seems smart to me. Congratulations on getting to this point. How is the annual compensation of $500,000 to Mr. Rivett's company determined as adequate? Is this figured to be a permanent cap on fees, inclusive of expenses?
Yeah, so maybe I'll go first. I mean, is it adequate? I don't think so. I think they're getting really good value for money here. It could be a lot higher, but like we said before, this was negotiated with Scott. It's a very small company, and we don't want to burden it with expense. And as we grow, I fully expect that people will be not consultants; they'll eventually be employees. But we need to see that growth, right? So what we're trying to be is prudent with respect to expense management at the front end.
Yeah, that's exactly right. It's a start. It gives us 2 years at a price. It gives us access to a great deal of resources that Paul and his team members have, as well as some physical space in the Ontario marketplace in Toronto to work out of as we tackle that market. So there's, I would say it's a start, and we've got 2 years to grow into whatever's next.
Okay. What is the plan for Western's current investments outside of Fortress? Is the goal to monetize them clear the board and focus on insurance with the proceeds, or will you maintain these investments going forward?
Well, Paul and I talked about this quite a bit. And, for me, when in the early days, that was a question that I had. And Paul explained his view quite well, that we need to, they're good companies, they're good assets. And we need to be careful with them. There will be buyers that will appear, and when they appear, we'll make decisions. But there's no rush to exit out of those businesses at all. And speaking personally, we've got a lot of blood, sweat, and tears into those businesses over the last 3-4 years with COVID and all of the other ups and downs of the Western Canadian marketplace. So and we've come to know and respect the management teams that are there. Many of them assembled by us. So there's lots of reasons, I think, to be careful and make sure it's in everything that Paul has detailed to me and to you today, that you've got to be conscious of the value.
That's great. Thank you. Next question is, thank you for the presentation. One of the key elements of the transaction is the 51% ownership threshold for Fortress. Western is now at approximately 42% ownership with the recent announcement. Therefore, an elevated risk profile exists until the threshold is met. If the threshold is not met, what is the outcome?
Well, we thought long and hard and wanted to make sure that we had what we felt were doable avenues to getting us there. To 51. So we're confident that we're going to achieve that, and there's multiple ways that we can get there. But if we don't get there, it's an important piece for Paul, and so it would be up to Paul to decide what to do. I don't intend to ever be in that situation. We're going to work as quickly as we can to secure the shares that we need in order to meet that 51% threshold. And we'll keep everybody informed every time we sign a deal, whether it's for 1% or 10%, we'll let you know, believe me.
Okay, the next question is asking for some forward-looking information, but what will be the dividend policy and what will be the capital allocation strategy between buybacks, dividends, and reinvestment?
Go ahead, Paul.
Yeah, no, I think right now we're just focused on great capital allocation opportunities, and as I said, there's a lot of really good opportunities for us to look at. Western already does provide a dividend, and I think the understanding is we would continue to do that in a very small way to give back to our shareholders. But the reality is, the capital allocation opportunities ahead of us are large, and so we think that we'd like to be buyers of good businesses, good to great businesses. So that's what we'll be looking to do first. And there may come a time when the best business for us to buy is our own business and buy back shares. That may happen from time to time for sure. But right now we're focused on a lot of really good opportunities in front of us. And we'll maintain that smaller dividend just because it's good to be able to show that you can give something back to your shareholders.
Great. Question for Paul. How can the Tavir and Western cultures be integrated in this new company? I'm wondering how things are going to transform because of this top-notch team.
Yeah, I think over time, I see a kind of a melding of the cultures. Like they're both relatively small, nimble entrepreneurial groups, and think quite alike. And I think that there'll be, as Scott was saying, there's definitely a lot more experience on the insurance side over at Western, and on our side a little bit more on the investment, maybe in transactional side. So it goes to the kind of the thesis, right? Is two great organizations coming together at what I think is going to be a really good time, good opportunity to be investing.
Thanks, Paul. Another question directed at you. Why buy a large stake in Western Investment to then increase Western Investment's stake in Fortress and allocate the rest in various investments? Why not do it directly through your own Tavir Capital Corp and with only your own capital?
Sure, I totally understand, but I think what it's getting at is why not just do something for the insurance company and listen, I've been out looking for the better part of 18 months, 2 years for a really good team, an insurance company to invest in, and they're hard to come by, and this is a gem in Fortress. And the opportunity though really made sense to get the whole enchilada, as they say, is to not just the small but growing insurance company, but to get a partnership with Scott at the top of the company and bring it all together as one. And like we're saying, kind of flip it from being a private equity investing to an insurance holding company that does investments. And so for me, it really is just a beautiful opportunity.
Is there a possibility to own 100% of Fortress Insurance one day?
I hope so.
Yeah, that's up to the Fortress shareholders and themselves. We're going to make that opportunity available to every Fortress shareholder right away. Some of them will stay, but over time, I'm sure we'll have opportunities to buy more too.
Fair enough. You are seeking to get a controlling interest in Fortress. What about the other three investments? Will you be active majority investors or more passive investors, or will you look to divest these investments?
Well, I think we want to do what's right for those. That's what Paul has said all the way along. We'll do whatever is right for those investments. And that was Western's philosophy. We wanted to own them for the long term, but we always said if there are stronger hands that the company should go into in order for what's best for the company, that we would step out of the way. And I think that at least in the short to medium term is still the philosophy. Whether we get active in the long run or to own more or own less, that'll be in the fullness of time and depend on the situation. Is that fair, Paul?
100%. Like we're long-term investors, so we just want to maximize the opportunity in each of these businesses. But with that said, to the prior question, we'll want to be buying every share we possibly can of Fortress. And those Fortress shareholders, and from a liquidity perspective, we hope that they'll, one day be Western shareholders, or they'll just find liquidity another way. But we'll never sell Fortress. But we're taking a long-term view on the other investments, and we're not in a hurry. We're trying to maximize the opportunity and the value.
That's great. We have a follow-up question here from Stephen Boland. Buying insurance carriers is very competitive. Intact, Definity, and even Westaim are all looking for companies in that middle to small category. In the broker space, DFY and IFC have bought multiple properties in the past year. How do you compete with those companies for acquisitions?
I don't think we do. I don't think we'll be looking at the same companies. I mean, yes, Intact and DFY and others are active. Westaim may be a little bit of a different situation, but the large companies are looking for acquisitions that move the needle, and their size, the needle is the requirement to move the needle is much larger. We've got good relationships too, and at Western I always felt the best deals that we made at Western Financial Group were ones where we put the time in to develop the relationship with the people, and both sides were satisfied it was the best deal. I would say that the least valuable deals we did were the ones where we participated in an auction. And so, just as this deal has come about with Paul through a lengthy process where, I don't think we went into it thinking it would take 9 months, but at the end of the day, that's the time that it took to get us to where we were both comfortable. Those are the ones that you can do when you're small and nimble. And that's, as we turn from talking to hunting, that I think will be the approach that will make us successful.
Great. Is there any sort of break fee contemplated in the current transaction deal? Is the deal signed?
It's signed. It's a definitive agreement with no break fee.
Thank you. Paul, I understand this is a sensitive question, but ballpark, how much of your net worth is going to be dedicated to Western?
What I'll say is the majority. So
Okay.
I will be putting majority of my personal wealth in and I love what I do. And I think with Scott and I and Shaf, we're going to have a lot of fun over a long term. And there can't be anything longer than a lifetime. And that's really what I'm looking forward to doing, building it slow and steady, like Scott's done. And yeah, so the majority of my wealth. And so I'll be, as they say, we'll be eating our own cooking here.
What is the average duration of insurance liabilities of Fortress's book of business?
Right now, it's all pretty much 1 year or less. It's the majority of their book. Vast majority of their book is related to property as opposed to liability.
What is the best way to stay updated on this transaction? Is there an email list we can register for? And I'll take this one, gentlemen. There is a link in both of the news releases to subscribe to the email news alert list. So please take advantage of that link to stay up to date. And then looks like we're down to the last two questions. Has the reinsurance component to mitigate risk been planned out?
So for Fortress, they're heavily reinsured, and they've got a nice portfolio of relationships. They Fortress themselves take the risk anywhere from 30 down to 5% of the risk, and the rest is reinsured. So that will, we've got a great set of reinsurance partners on which we can lean on, and that doesn't even include the relationships that Paul would be bringing from his days in much larger business.
Okay, and this is the final question, and it is personal and directed at Paul. Why did you leave Fairfax?
I just basically to spend more time with my family. I'm a bit of a workaholic. Love Fairfax, continue to love Fairfax, but made a decision to leave to support my family and realized my family loves me and I love them and started getting back into deals again. And once you get started, you can't really stop, especially if you love it. So here I am.
We did get another question just now. If your duration on liabilities is less than a year, how can you invest float with a long-term view? Will the float not have to be paid out within that duration as well?
Yeah, but the float refills itself, right? So that's the piece. And Paul, I'll let you talk about the difference between liability and property float.
Yeah, no, and so it's not only is it constantly refilling, but there's also obviously, as Scott's referring to, the reserves, right, for actual loss and incurred but not reported. So you're able to invest that, and and as the company gets bigger, that continues to get bigger along with it.
Okay, gentlemen, I think that concludes the Q&A. I'll turn it back to you for your concluding remarks.
Again, I just say thank you. First of all, thank you to the longstanding Western shareholders, which is most of the Western shareholders, for your patience. It's been a winding road, but here we are. I think launched for a great run, and hope you'll stick with us. Hope you will support the transaction. If you have any questions, most of you know how to get a hold of me. You can do it through the link or call me direct if you wish. We're very keen to get this across the finish line as quickly as we can. The board is unanimous in its support of this transaction, and we're here to answer any questions.
Yep.
Thanks very
And
much.
I'd just say thanks very much to everybody for joining the call, and thanks to Scott and Shafeen for allowing me to partner with them. We're going to have a lot of fun.
That's great, gentlemen. Thank you very much. And with that, we will conclude our meeting today.
Thank you.
Thanks.